Is it time to rebalance your portfolio? Let's ask Anna Rathbun of CBIZ Investment Advisory Services, and I'm Lisa Bernhard with Reuters. Anna, January is a time where many folks do rebalance their portfolios. If someone hasn't, should they? What will they likely see, and what should they do?
Well, if you haven't logged into your 401k account or a 403b account, it might be a time. And if you haven't done it all year last year, you probably will find that you have a lot more exposure to the stock market than you had anticipated or had even intended to. So that's one of the reasons why we want to rebalance. Go back to your original targets. If you were 50% equity market, 50% bond market, and that is there for a reason, and suddenly you find yourself at 60%, then you probably have a riskier portfolio for your profile. So it is very important to periodically go in, and January is the perfect time to do so.
So, when a client comes to you and you map out an investment strategy for them, where do you put the inflation rate in terms of showing them how things will play out with inflation? Do you put it at 3%? Do you put it lower than that? What do you think?
We think about 2.5 to 3 is reasonable. And there's some data to support this now because it's been a while since the inflation started to come down. Inflation, the question is, where does the economy want to settle at, right? It's not about forcing it to 2%. And it seems to want to settle in between 2.5 and 3 at the moment. So there are a lot of reasons for this. Part of it is the geopolitical issues, the wars, as well as some of the onshoring that's happening. And we don't think that's going to slow down, especially the onshoring component. So essentially what we're saying is we think inflation is going to be higher than it was before the pandemic. And from a portfolio construction point of view, the best thing that will beat inflation over the long term is stocks. So bonds are there to help to facilitate the diversification and to mitigate the volatility. But at the end of the day, stocks will win the day in terms of maintaining your purchasing power and beating inflation.
And let's just tease it out, even if obvious, beating inflation how?
So if inflation is 3%, we're expecting stocks to outperform 3%. So if you have, and not only that, but also increase with the GDP growth and the premium of managing a company, right? Investing in a company and having productivity and innovation on top of that. That's what I mean. The return on the investment of investing in stocks is going to be higher than the purchasing power that you're losing through inflation at around 2.5 to 3%.
Let's switch now to data that came out today, which was retail sales. The headline number showed that retail sales for December did grow, but a little bit less than economists had expected. But the core sales number was pretty strong at 0.7%. That was almost double November's core sales. The market's kind of flip-flopped since that data has come out. What was the takeaway, do you think, for investors on that?
Yeah, so there's some details in the core number. It was definitely strong, 0.7% month over month. There's nothing weak about that number. But if you go under and think about what might have driven that number, I would think there's some pent-up demand for large ticket items, including cars. And these are, big numbers here. And I would also venture to guess that a lot of these purchases may have been done before the new administration's potential tariffs take into effect. And we're seeing this actually across the board. So I wouldn't be surprised to see that that was a factor in the higher retail sales number in the core side. There's some, and that's the front loading that's happening in terms of purchases. But there was also some choosiness among the consumers. So you saw a lot of holiday sales, buying of goods, but services were down. So restaurants, going out to restaurants, as well as drinking places, these were lagging compared to other months. And that is an indicator that consumers, while during the holidays may be buying a lot of gifts and goods, they're actually making up for it by spending less in restaurants and drinking places.